Howdy. Today's video we're going to do a very rudimentary 101 course on what crypto is. This video is meant for people who just have gone too long without doing their own research on what crypto is and are too scared to ask anyone else and risk of feeling dumb. Or if you just you want to know more about it, or if you just want to get into the investing side of crypto, this video is just going to be a very short informational video on what it is, how to buy, how to sell, who made it, where it's stored, all that kind of stuff. So let's get into it. So crypto stands for cryptocurrency. Cryptocurrency is whichever one, Bitcoin, Ethereum, whatever it is. There's many thousands of different kinds of cryptocurrencies, but the three we'll be using as examples are the main three, which is Bitcoin, I'm sure you've heard of, Ethereum, and then Litecoin. Those are just the top three. It's basically like platinum, gold, and silver. That's the best way to put it. So let's just talk about where they're stored. Where they're stored is called blockchain. Blockchain technology is a relatively new form of storing data online. And the reason they use blockchain technology compared to anything else is because the main goal of any cryptocurrency is to be a decentralized digital currency. The point of decentralizing a currency is that no one completely owns it, no one completely makes all of it, no one completely controls it. So you can mine Bitcoin right now. Mining Bitcoin is its own different thing. I'll make a video on that probably much later. But mining Bitcoin is basically when you create your own Bitcoin or any cryptocurrency. So obviously that's different than the US dollar. Only the US government can create US dollars or any type of US currency. But the difference of crypto is that you can mine basically many different forms of crypto. Obviously there are some you can't mine, but most you can. So the whole point of crypto is to be a decentralized currency, digital, online, stored in blockchain technology. Blockchain technology was chosen because it's just the most secure form of technology online that is spread amongst many different computers. So again, not just one central computer, it's spread amongst many different computers. Now that we've discussed basically what it is and what the purpose is and where it's stored, what we can now discuss is how to buy, how to sell. So you can buy and sell crypto in many different ways. And again, crypto, when I say crypto, I mean any form of crypto. It can be Bitcoin, Litecoin, Ethereum. There's many other smaller coins that you can buy and sell. There's many ways, because like I said, blockchain technology is where it's stored on. For example, Bitcoin has its own Bitcoin blockchain, Ethereum has its own Ethereum, Litecoin has its own. And in those different blockchains, there exists smaller or bigger coins on those as well. So it depends on what blockchain you're dealing with, of course, but it's really not that hard. All you gotta do is download COINBASE, or download Binance, or download any, you can honestly buy and sell on Robinhood and WEBULL too, which you shouldn't, because you don't technically own the crypto if you buy it on Robinhood or WEBULL. And what I mean by that is when you buy on Robinhood or WEBULL, you can't send or receive crypto on those places, you'll notice. And that may not seem like a big deal. It's who cares? I plan on buying it and holding it. I don't know, all that bullshit. If that is your plan, then that's fine. You shouldn't trip about that. But the reason why that is an issue for anyone who actually knows about that kind of stuff, if you can't send or receive any forms of your crypto or anyone else's crypto, that means you don't actually own it. So think about it for a second. If you can't get it out of that account and put it into a different account, wallet, that's the word for it, a Bitcoin wallet, Ethereum wallet, then that means you don't actually own it. So the way Robinhood and WEBULL works is that if you put $50 into Bitcoin, yeah, you technically have $50 worth of Bitcoin, but you don't own it. Robinhood owns it and is technically loaning it to you. So if you can't send or receive out of that wallet, that means it's not yours. And why would you want to loan it? You know what I mean? You should use a service like COINBASE. My link is in the bio for. So you should use a service like that where you actually own it. You can send Bitcoin to people. You can receive Bitcoin from people because that means that's your Bitcoin. It's not anyone lending you it. So if you're going to invest, do not use a service like Robinhood or WEBULL. Use them for stocks and all that kind of stuff. But do not use them for crypto. It's just not a good idea. So now let's just real quickly discuss why people are interested in cryptocurrency. Why do people buy it? Why do people invest in it? Why do they have such a large amount of faith in it compared to other currencies? Other currencies meaning the US dollar. So basically, if you haven't done your research on inflation, I'm sure everyone knows what inflation is, but the annual percentage of inflation of the US dollar is around 5% every year. So if you keep, let's say you put $1,000 into your bank account every single year and you just keep it in your bank account. And yeah, some savings account give you 0.1% interest yield, which is, whoa, first of all. But yeah, so technically you would be making money off of the money you keep in your bank account, 0.1%, which is barely gonna be a cent, maybe a little more. No, actually probably even less. But if you keep money in your banking account, it's just not a good way of accumulating wealth. Yeah, if you put it in there, you'll have it later whenever you need it, but you're not using your money to make more money. So if you put your money into something like, let's say the S&P 500 that's stock related, or let's say like we're talking about right now, cryptocurrency, obviously if you put your money into something, it could go down or up. That's what their main argument is, what if it goes down? Then I have less money. Obviously, don't do it if you don't want to have the risk of having less or more money. That's just a simple train of thought, man. But if you're, I think, smart and you want to make your money, have your money make you more money, obviously you should put it into something that could appreciate in value over time. So cryptocurrency, if you just look at any chart for literally almost any crypto over the past, not even 5 years, let's say 5 months, it tends to go up. And again, it also randomly tends to go down. That's just how all investments work, you know what I mean? So the main appeal in crypto is that it's basically a savings account. If you put all your money into Bitcoin, Ethereum, Litecoin, all these other random popular, well-known cryptos, because there are some scam coins out there, they're called shit coins, do not put your money in those. Be careful, very careful with those. The main investment strategy for crypto is just buy and hold. And what that means is that you buy and you just keep adding to that position because you know that over time, the value of those cryptocurrencies will only increase. For example, the latest bull run, crypto a couple months back, I think like May, Bitcoin went from like 40K to 62K or like 60K, around that. That is crazy. The return on if you owned one Bitcoin, just one, again, that's a lot, but if you just owned one, that's $20,000 right there. That's crazy, and you didn't even do anything. People make $20,000, try their whole lives to make $20,000 by actively day trading, when in reality, a passive investment, just like putting money into Bitcoin every single month, or Ethereum, Litecoin, whatever it may be, you're just making money as the value of it goes up. And of course, it can go down randomly, but long term, the train of thought behind it is just, it's meant to go up. So why keep a savings account that doesn't make me any more money if I could just put it into crypto that has a much higher rate of return compared to other investments that are long term, like stocks, like the S&P 500, ETFs, boring stuff like that. So that is the main investment strategy behind it. But the main purpose, like I said before, is a decentralized online digital currency that could eventually replace the dollar. That is the purpose, but the reason why behind many people investing it is a long-term savings account. So yeah, that's basically it. Crypto isn't really that hard to understand. There's just a couple things you need to understand first before you can do further research. Obviously, I left out a lot of stuff. There's many more things that go into this, but these are the 101 basics of crypto that I think you need to know before you go on doing your own research, because a lot of other articles and stuff can be very, very annoying to understand. So I thought I'd make this one very simple to understand and very short, so I don't lose your attention span or anything like that. So basically, the few takeaways of this is that crypto, the main goal of it is to be an online, digital, decentralized form of currency, and it's used for, basically the majority of people use it for, a long-term savings account instead of just keeping your money in your bank to accrue 0.01% interest, or even in the S&P 500 or stuff like that to accrue 7% annual return. Crypto is basically just a different form of long-term investment in a newer industry that may have the potential to be much bigger in the future and eventually replace the US dollar or other forms of currency that have been historically declining in value due to inflation and overprinting and stuff like that. For example, just in 2020, over 30% of any single US dollar printed was printed in 2020. That's crazy. If that isn't inflation, then what is inflation, bro? Milk carton's about to be $16 a gallon. This shit is not a joke anymore. So yeah, with the widespread implementation and popularity of crypto arising, you will find that you can honestly pay for a lot of stuff in person. Grocery stores, I've seen a steak place in New York take Dogecoin as cryptocurrency. That's crazy. But with the popularity of it rising, it may very well be the next currency. And even if it isn't, it could work as a long-term investment for you to keep your savings in something that you want to make more money for you. So I hope this helped. I hope it wasn't too confusing. I know the way that I talk is kind of weird and I talk too fast, but I just wanted to make this introductory video in case you didn't know what crypto was and you're just afraid to ask at this point, or you're too lazy to do research, because I know I don't like reading. Much rather hear some big brown guy with a beard talk about it really fast and read an article about it. Alright, next video I'm going to talk about the crypto I own and my investment strategy behind them. I'm going to go in depth into like why I own them, and then like how long I'm gonna hold it, all that kind of stuff. So if you want to learn more and more about crypto, you can watch that video. If you don't, that's fine. Thank you for watching this one. See ya.